Hey Joe, I hope all is well. In today's video, I'm going to be telling you why 90% of millionaires invest in real estate. The benefits of investing in real estate are numerous. With well-chosen assets, investors can enjoy predictable cash flow, excellent returns, tax advantages, and diversification. And it's also possible to leverage real estate to build wealth. Before we get into the rest of today's video, welcome back to my YouTube channel where we discuss all things finance and real estate. Do me a favor, if you guys find any value in this content, be sure to tap that like button. It really helps us support and grow the channel. Also consider subscribing and turning on the notification bell so that you get updated when new videos drop. Alright guys, so one of the best parts of investing in real estate is it can act as a hedge against inflation. Now inflation refers to the rise in cost of goods and services over time, which effectively makes the value of our money go down. So here's the thing guys, inflation has been at 3.6% year over year in the past couple of months, the highest since the early 1990s. Now on top of that, other measures such as the Consumer Price Index have inflation numbers running even hotter. The Total Consumer Price Index, also known as the CPI, rose by 5.3% year over year in August after hitting 5.4% on an annual basis 2 months earlier. The core index, which excludes volatile food and energy components, rose by 4% year over year in August. Now, most of this jump can be explained by the basic effect of inflation. On the whole, prices fell sharply last spring, so the year-on-year increase is now even bigger. But many individual investors doubt that this trend is short-lived or could lead to periods of high inflation and could erode net portfolio returns. These concerns exacerbate market volatility. Now, here's the thing, guys. Real estate is often considered a good asset in terms of inflation, partly because the value of houses rising with inflation and partly because it is a leveraged asset. With that being said, good interest rates will not change and the amount you pay for your house may not increase, although its value may. So when you're buying real estate as an investment, your down payment is maybe 20 to 30% of the house price. Now the rise in house prices is the inflation rate multiplied by the cost of the house, not the down payment. So with that being said, if inflation doubles the value of your home, it could quadruple the value of your down payment. And if you were to take out a fixed rate mortgage, you've done better because you're paying inflation adjusted dollars. And what I mean by that, guys, is you essentially end up paying less than you did when you took out the loan. So investing in real estate protects you against inflation. There aren't too many other investments that will make your investment worth far more than the assets you have to invest in. So for example, guys, if you had $10,000 invested in the stock market, you can usually buy just $10,000 worth of shares. Now this exception would be if you had a margin account, which is borrowing, but you must be an approved investor and have a net worth to achieve this goal. My point is, guys, is that with property, you can put down a fraction of the cost of a home and invest in it. So for example, if you found a house that costs $100,000 and you have $10,000, it's likely that you'll be able to find a loan as long as you have good credit and a stable income to fund the rest. So again, guys, this means that you invest 10% of the asset and you own it. Then over the years, when you pay off your mortgage, you'll have more investment, not only by paying off your mortgage, but also by naturally appreciating your real estate. Now, another benefit of real estate investing is appreciation. So unlike stocks or bonds, you can force the real estate to appreciate. I mean, I know it sounds strange, but it's so possible. First of all, you need to know that property appreciation occurs naturally. On average, for most areas, property is appreciated 3 to 5% a year, and you do nothing but maintain your house. However, you can also increase the rate of appreciation by renovating or repairing. Now, not all renovations increase the value of your home, so if you're renovating to increase its value, work with a licensed appraiser or real estate agent to find out the best or most valuable things you should do. Now, your investment may not pay off dollar for dollar, but some renovations can pay you back up to 80 or 90% of your investment. And here's the thing, guys, renovations don't have to be big. Of course, adding a roof or tidying up the basement will add more value than simple cosmetic renovations, but even minor kitchen and bathroom renovations can greatly affect the value of your house. Now, real estate offers great tax advantages. Like any business owner, real estate investors have the benefits of many tax write-offs. But while this is an investment, when you own a home and rent it out, you run the business, you're a business owner. And as a business owner or real estate investor, you can often write off the mortgage interest paid on the loan, loan issue points, maintenance costs, depreciation and property taxes, homeowners insurance, and HOA membership fees. With that being said, guys, be sure to talk to your tax advisor, but be aware that investing in real estate is a benefit. On the contrary, when you invest in stocks or bonds, you can only write off any capital losses if you sell your assets at a price lower than you paid for them. Now, on top of everything that we've discussed so far, guys, real estate can offer you regular cash flow residual income. So here's the thing, guys, if you buy and hold real estate, you can earn monthly cash flow to rent it out, which increases the profit of owning your real estate because you rely not only on appreciation, but on monthly rental income. So buying and investing in real estate and looking for quality tenants and managing properties may seem overwhelming, but there are plenty of resources available to help you. I myself have a great property manager, and it was the best decision I ever made in terms of real estate investing. So for myself, it really does make this investment truly passive as my time is freed up to focus on other things. I have to say, I'm not bogged down trying to keep track of rent, bookkeeping, screening tenants, maintenance requests, or repairs. All this is handled by my property manager. And here's the thing, guys, he simply simply lets me know what's going on and keeps me in the loop. So here's an additional tip. If your local city is very expensive, such as my market of Los Angeles, California, I would say consider looking 1 to 2 hours out of your area for more affordable real estate, or even consider investing out of state. If you're interested in investing out of state, Roofstock is a good resource. Not only do they list investments homes for sale, but many of them are already rented. So when you buy a house, you immediately become a landlord. Now, Roofstock offers a lot of due diligence to study, so all you have to do is buy what you think is the best property for your situation. Now, of course, there's always a risk of default or early release of a home, but every type of investment carries risk. Without risk, there's no reward. Now, one of the best wealth builders real estate provides is the ability to leverage. So leverage in real estate is using borrowed money to buy a property. When leveraging a property, you borrow funds from a lender to be able to purchase an investment property instead of having to cover the entire purchase price yourself. I have to say, Joe Dolls, being able to leverage your investments is one of the reasons real estate investing is so attractive. Now, the idea behind leveraging real estate is to be able to increase your returns by using other people's money, also known as OPM. And by using other people's money, you're not having to put as much of your own capital into buying a property. So leverage allows a real estate investor to either purchase a property that costs more than the amount of money they have available to spend, or it allows them to spread their cash across multiple properties. While the potential for good returns is possible, for example, when prices rise, using leverage can be a double-edged sword. And this is because if the investment moves in the opposite direction, it could lead to losses. However, in the case of property prices, losses occur when prices fall. Consider your 20% down payment often seen on real estate purchase requirements. So you would need $100,000 for a $500,000 home. By putting only 20% of the money and borrowing the rest, the buyer basically uses a relatively small percentage of his own funds to make the purchase. This is why real estate investors often refer to the remaining percent of the purchase price as someone else's money. Now, here's an example. Let's pretend that property is growing at a rate of 5% a year, guys. This means that the borrower's net worth has grown to just $525,000 in just 12 months, using our $500,000 example. Now, comparing this benefit with the return on direct purchases without any loan highlights the value of leverage strategies. For example, the same borrower could use the $100,000 to make a full purchase of a $100,000 property. With that same 5% interest rate, the buyer's net assets from the purchase of the all-cash property, $100,000, will increase by $5,000 over a 12-month period. That's the difference of $20,000, which indicates a potential net increase provided through the use of leverage. Now, imagine a 5% annual increase over 20 years. Over time, the use of leverage can have a very significant and very positive impact on your net worth. Now, guys, I'm actually in the process of taking advantage of appreciation and leverage on one of my investment properties. I was able to increase the value by increasing the rents over the last couple years and by renovating the units and upgrading them. That combination of natural appreciation has put me into a position where I'll be able to pull out my down payment and the majority of money invested into the property. So essentially, guys, I'll be into the property for free, having recouped my down payment. I'll be able to use that money to buy another property, which will add an additional income stream and increase my net worth over time. Alright, guys, so what do you think? Is investing in real estate a good idea? Would you invest in real estate, or do you prefer some other type of asset? Don't forget to share your thoughts and valuable feedback with us in the comment section below. Alright, that's all for today's video, and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. Thanks again for watching, and until next time.